오늘은 1947년 뉴욕주에서 설립된 미국의 투자금융회사인 프랭클린템플턴 CEO 제니존슨과의 인터뷰를 준비했습니다. 현재 약 1조 5천억 달러의 큰 자산을 운영하고 있으며 다른 대형 투자회사와 마찬가지로 다양한 종류의 펀드 상품을 판매하고 있는데요. 지금부터 제니존슨과의 인터뷰 만나보실까요?
So I think first, celebrating a 75-year milestone is a big deal. And I think it's a big deal because companies only survive and thrive for that period of time if they're meeting their clients' needs and achieving the goals of their clients. And so, at Franklin Templeton, we say we help our investors achieve the most important milestones in their lives. If we didn't do that well, we wouldn't be around. And we do it globally. We have clients in 155 countries. So I would say, first it's a sign of being able to innovate as clients' needs have evolved over those 75 years. And in the last, 3 to 5 years, we've really changed the firm because we found external pressures that we needed to actually ensure that we innovated. So one, we saw this movement to more private markets and a desire for investors, particularly institutional investors, but we think it'll also happen in the mass affluent channel to be able to invest in private markets. And so we've done acquisitions. Today, we're a top 10 alternatives manager. So we went from very traditional asset management to also having, being one of the leading alternatives manager. And it's that kind of innovation. The other thing that we see is technology is changing certain parts of the business. And, we've made investments in technology. A company called O'Shaughnessy Asset Management was creating a platform for investors. Let's see, I'm not sure, I'm guessing it's probably been 5 years. It was probably 4 years. Okay, 4 years, there we go. So it's been 4 years. We were one of the first foreign managers to enter Korea. We've celebrated over 25 years. We've remained in the market because we think it's a great market to be in. It's a great, there's a tremendous institutional business with, a lot of pension assets. We think that the retail investor is a great opportunity for us. And so we're in this market because we believe it's a good place to be. Look, I think, I look at any market where there's a sophisticated pension system or a young demographic where people, and the economy's growing, where people are starting to move from, bank deposits into investments. And that's always a process that people go through as an opportunity. So, while you can always look at the U.S. as a big, market, the reality is the growth that's happening, particularly in Asia. 1 billion people are going to be added to the middle class in the next decade, 87% of them in Asia. So anywhere where you have a growing middle class, a fairly sophisticated institutional investment market like Korea are great opportunities for us and get us very excited. My first message is investing is not a part-time job. So the most important thing is find an experienced advisor who has it as their full-time job. The second thing is diversification. You never know when there's going to be a challenge in the market or where it's coming from. And so you need a diversified portfolio to ensure that you can be resilient against any kind of those shocks. And then the third is stay invested. And that sounds a little crazy with the volatility that we've had, but if you actually looked, I think there's a little bit over 5,000 trading days between something like 2012 and 2021. If you miss the 10 best days in the market, you miss 65% of the return that you'd get over that period of time. And the problem is we never know when those 10 best days are coming. The other probably most important thing is if you're young, don't wait to start saving. So if you put money away, let's say you put $5,000 away at age 25 every year until you're 35. So 10 years, you put $5,000 away. You will have more money than the person who starts saving at age 35 for 30 years and puts $5,000 away because of the power of compounding. So the most important thing is no matter how little, if it's, a couple $100, you start saving early, and that compounding effect will have a dramatic impact on your retirement savings. I think that in 2023, you're still going to have, I think that inflation's going to be, core inflation's going to be stickier, and it'll take some time for the Fed to be able to get it under control to a place where they are comfortable with. So you're going to have anywhere from, I think, 2 25 basis point increases to 3 25 basis point increases in 2023. And then I think they sit on that higher rates for a while, and we're hearing Chairman Powell talk about that. So what do you do in a rising rate environment? A couple things. I think that there's obviously the intention is to slow the economy, might even put the U.S. economy in a recession. Europe's probably already in a recession. So then you look at companies that are strong balance sheets, good free cash flow. It's times like this when the market's really volatile that I believe in active management, because you can have security selection. And we're reminded that 40% of the S&P 500 return actually comes from dividends. So companies that are paying good, strong dividends and have the balance sheet to withstand it is, I think, a good investment for this time. I also think you're never going to get exactly the tipping point of peak rates, but we know that the majority of the increases, so actually you get paid to be in the fixed income market. I would tend to say stay more conservative with more investment grade. But honestly, with the spreads widening and things like high yield, we haven't really seen companies in credit wither too much. So I think there's probably opportunities again in fixed income. I mean, for the last decade, you could be invested in fixed income and essentially get no return. Now you're going to get meaningful return in the fixed income market. I would just say that, as I said before, Franklin Templeton has been here for 25 years. We are committed to this market. We're excited about this market, and we're excited about the opportunity. And we will continue to be focused on serving clients in the way that we, I think have been doing it for 75 years. Thank you.